Okay, see here in transfer pricing, we have started with section 92C. 92C is what? Arm's length price. Now the theory of arm's length price is broadly divided into 5 parts. You remember what are those 5 parts? Look at this. Theory of arm's length price is divided into 5 parts like this. And out of this, first part, meaning I have explained. What is the meaning of arm's length price? It is a true, fair and the genuine price. It is a price charged in uncontrolled transactions. Means transactions which are not in our control. And it is a price charged to unrelated parties. Because only when you deal with unrelated parties, the price can be genuine. And vice versa, if you deal with related parties in a controlled transaction, you can manipulate the price. But that is not arm's length price. Arm's length is the genuine price, which is always in an uncontrolled transaction and with unrelated parties. So this I had explained, and then we started with computation. Now even computation theory is further in 5 parts. How? Why to compute ALP, when to compute, what time, who will compute and how to compute ALP. So tell me, why to compute ALP? What was the reason I gave? Because the government does not trust. What government does not trust? This thing, see. Government does not trust the price charged by assessee to its AE. Since government does not have trust on this price, we need to find one true and fair price. That's why we have to compute ALP. Okay? Because since they have manipulated a price, they have created base erosion, profit shifting. So we cannot trust their price. So there is a need to find out the genuine price. So this was why to compute ALP. And then when to compute ALP? Whenever there is an international transaction between associated enterprise. Whenever these two conditions are satisfied, at that time you have to compute ALP. So this was when. And then who should compute ALP? It is the assessee who has to compute ALP. Don't think that we will do whatever we want. If government has doubt, let them compute ALP. It is not like that. See what law says, if we want, we are going to compute ALP. But first it is your duty. First it is your duty to compute the ALP, and in case assessee fails to compute, then government will take the charge. But initially it is a responsibility of the assessee to compute the ALP. And usually assessee doesn't know all these things. So work is done by the chartered accountant. Then after, who should compute? At what time to compute? So what is the timing of computing ALP? ALP is not computed during the previous year. After the year is ended, after 31st March, up till the due date of filing return. Means at the time of filing the return, ALP computation is done. Because the purpose of computing ALP is what? We want to see the ALP and the difference between ALP and the actual price. This difference is supposed to be added in the returns. So the whole purpose of computing ALP is for return filing. So it is understood that ALP computation is done at the time of filing the return. And once ALP is computed, the difference between ALP and the actual price shall be added to the income of the assessee, which in my example is X Limited. So all this is done at the time of filing the return. So this was at what time? And then fifth part, there are 5 things. Why to compute ALP, when to compute, who will compute, at what time. Now last point is how to compute ALP. So for how to compute ALP, what did I say in the last lecture? Law has made total 5 methods of computing ALP. And what law says? That it is the assessee who has to select the, what was the term? Most appropriate method. Just by heart these words, because in paper, whenever you are writing about methods, this language should appear. What language? ALP should be computed as per the most appropriate method. Say, what did I say? Most appropriate method. And what is most appropriate, that assessee has to decide. And most appropriate, for that there are 5 choice. Out of the 5 methods, assessee has to select the most appropriate method. So this was what I had explained in the last lecture. Now, we have to discuss one by one the 5 methods of computing ALP. Look at the screen. What is the first method of ALP? CUPM. This is called comparable uncontrolled price method. In short, we call it as CUPM. CUPM means comparable uncontrolled price method. And see, my advice is what whenever you learn some method, literally feel the wordings. Because when you feel the wordings of the method, it becomes easy for you to understand. Because see, sometimes what a student does, the title of the method, they keep it aside and they start understanding the concept. That's not proper. Understand the concept keeping in mind the title. So here what was the title of the method? Comparable uncontrolled price method. And actually you should start guessing on your own that what this method should be, how this method might be working. So that way you should have the approach of trying on your own first. Although I will explain everything, but my advice is first understand and feel the title, and feeling the title you should try to understand on your own and then wait for the explanation. So what was the title of this method? Comparable, look at the screen, comparable uncontrolled price method. Okay. Now see, with this example, I will be able to explain the whole method. And the purpose of learning this method is what in exam they can ask a sum or a question of around 6 marks. And if a sum of 6 marks comes, and if this method is thorough, confirm you will get full 6 marks. So it is a bonus thing. Sum will be definitely simple provided you understand the concept which I am explaining now. Okay. So see here, I have taken the same example with which I started the chapter's introduction. You remember this example? In this example, X and Y both are associated, and what X Limited has done? It has sold the goods to Y Limited at a lower price, whereas the genuine price of the product is 6,000. See, 6,000 I have written here. Can you see outsiders? Outsiders means what? Who are not associated with us. See, the one who is associated, I will call them insider. They are from our group only. Outsiders means the one who is not associated and one who is not related with us. So see, assume X Limited, when it deals with outsiders, or I can say when it deals with unrelated parties who are not associated with X Limited, it sells the same product for $6,000. So obviously we will feel that when you sell the product at $6,000 to unrelated parties, so what did I say in arm's length price? The price charged to unrelated parties is a genuine price. So we feel 6,000 is genuine. But then looking at the price of 4,000, what law will feel that X Limited has done cheating by showing lower selling price? So in such case, what law says? We will not accept your 4,000. We will find out the genuine price. Now, to find out genuine price, obviously government will rely on 6,000. Why? Why this 6,000 feels genuine? Because it is the price at which we have sold the goods to unrelated parties, that is outsiders. So we feel 6,000 is genuine. So in such case, as soon as the law tells X Limited that see, we feel 6,000 is genuine, but since you have shown 4,000, you have done cheating. You know what excuse X Limited can have? As soon as the government blames X Limited for what? For showing such a low sale price, what excuse X Limited can have? Take it on you. Imagine you are X Limited and law is blaming you. You have shown the selling price less, cheating. So try to give some excuse. Means I am comparing what? You have sold the same product. Let's assume the product is mobile or laptop. You have sold the same product for 6,000. But to Y Limited, you are associated, you are selling for 4,000. You are showing less, cheating. So can you guess if someone wants to give excuse, you know very well how to give excuse. Many times I also keep blaming. Why didn't you attend the lecture? Why didn't you do the homework? Why didn't you study? You always have excuses ready. So here, think from X's point of view. If you are X limited, tell me what excuse you can have. Yes, you know what X limited can say? See, we understand government that our price of 4,000 looks smaller than the 6,000. But then there is a difference. This outsiders to whom we have sold for $6,000, we have not given any discount to them. But in case of our transaction with Y Limited, we have given them a bulk quantity discount. Means what X Limited is trying to say, you know, that the order placed by Y Limited was in bulk, and whenever someone places the order in bulk, there is a tendency of giving the discount. So this is the excuse or a justification given by X Limited. And for outsiders, they are saying outsiders order is small in size, and when the customer places a small size order, we don't give discount. But to Y Limited, we have given discount because the order was in bulk. So this is the excuse, or let us assume it is a genuine point. Let us not argue that no, Y Limited might be lying, just making up, cooking up some story. So let us not go into that. In real life that happens. People lie also. But right now if you start thinking all that, you will not understand the method. To understand this method, appreciate this excuse that it is genuinely like this. What? That X Limited, when it sold the goods to Y Limited, it had to offer a quantity discount, and let us accept it is genuinely like this. So now if actually it is like this, then it would be wrong to blame X Limited that you are showing less. Obviously it will look less, because when you give discount to customer, the sale price will reduce. So that is not cheating. That is a business policy to give discount. So, you know, because of this discount point, these two transactions are not comparable. Although both the transaction might be sale of laptop, means X Limited has sold laptop to outsider and the same laptop is sold to Y Limited. Although the transaction is of the same product, but still the transactions are not comparable. See, whenever you compare two things, you have to bring both the things at par. For example, can I compare you with me? You don't know all this. I know everything. I know everything by heart, each and every section. You don't know all this. Can I compare this? It's a funny comparison. What you are studying now, I studied all this way back in 90s, in the year 97. I completed my CA final. So since then I am doing the same thing. If a person teaches the same thing, he knows everything. So not a big deal. And if I compare, see, you don't know, I know, that comparison itself is wrong. Yes, between two students of mine, if I do the comparison, then the comparison is right. Because all these students are of same level. Everyone is having same circumstance. And then if I say, see, this student has done the homework, you have not done the homework. So that comparison is proper. This student is studying, this student is not studying. That comparison is proper. But I cannot compare me with you. Instead of what I am trying to say, whenever you compare two things, both the things should be at par. But here there is a problem of parity only. The transaction with Y is subject to discount. Repeat, the transaction with Y is subject to discount, whereas the transaction with outsiders is not subject to discount. So because of that, the transactions are not at same level. So what to do? Obviously we will have to bring both the transaction at same level. And once both the transaction come at same level, then the comparison is proper. Okay. So tell me what to do. The idea is we want to bring both the transaction. Which transaction I talk about? Both means transaction of X to Y and X to outsiders. So we need to bring both the transaction at par. Par means at same terms and conditions. So tell me what to do. See, if I ask you what to do, you should get two options in your mind. Please think about both the options, and since a student can think of two options, that is a whole reason for confusion in paper. You know, although it is very simple, but you know, some students make blunder. And that blunder how they make, I will make you understand. First you tell me what are the two options to bring both the transaction at par. See, look at my hand and understand, okay? This is transaction from X to Y. With hand you will understand better, okay? This is my right hand. This is transaction with X and Y, okay? And this is X to outsiders. So what did I say? This transaction is subject to this is X and Y. Don't forget this. So see, with hand you will understand better. So transaction with X and Y, this is subject to discount, and this is without discount. So see, one option is what you know, since this is a discounted sale price. You know why did my hand go down? Why did my hand go down? Because whenever you offer discount, the sale price will become lower. So since I am not talking comparing the amounts, the nature of discounted price is low compared to a full price. So this is full price outsider, and X and Y is a discounted price, so it will be a lower price. So what are the two options? Either to increase it and match it. What is the other option then? Or to reduce this. Understand two options, then I'll tell you what to do. This is X and Y, and this is X to outsiders. This is discounted, so it will have the tendency of a lower price. Okay, so what options I gave to bring both at par? Either to increase this. What to increase? Tell me precisely. Transaction of X and Y, which is at $4,000, right? I should add back the discount, or I should provide discount in, tell me the figure, 6,000 amount. So that are the two options. And you know, student gets confused here only. They do anything which they feel. And you know, actually you are not having any choice to do whatever you want. What you need to do, you know, now feel the name of the method. Feel the name. Comparable uncontrolled price method. Feel the words. Means you have to adjust the uncontrolled price. Whatever plus or minus you feel like, you have to do it in uncontrolled price, because the name of the method itself says that select the uncontrolled price and do it plus or minus. Adjust it in such a way so that it matches with controlled price. We are adjusting the uncontrolled. In such a way to match it with the controlled and the cheating wala price. So see, if you have felt this words genuinely, then you will be able to give me the right answer now, okay? Because see, although I might be stressing on uncontrolled, but some students do not understand still. So if you have understood the emphasis which I have laid on uncontrolled price, you will be able to answer. Now, once again, see this. This was X and Y transaction at, which figure you tell me? 4,000. And X and outsiders was at 6,000. So this transaction was at discount. So this was a problem, right? So now what to do? Should I touch this price? You should not touch this price. What is the name of the method? Comparable uncontrolled. This is the uncontrolled price. I hope you understand. What should I do? Tell me. This is the uncontrolled price. So we need to adjust this. So tell me, what should I do this so that both will come at par? Obviously, I have to reduce this. What is this amount? Tell me the amount. $6,000. I have to reduce it so that it becomes at par. And we have to reduce 6,000 by how much amount? That will be given in the question. You don't worry about the calculation part. You will be mainly tested on plus or minus. Whether to plus or to minus, you will be tested on that. But regarding the amount of discount which we need to adjust, don't worry, it will be given in the exam. Okay. So this was 4,000. I should never touch this. Make it a point. This statement is so important. See, you will not understand why I am reacting so much, because I have seen silly mistakes. That's why at the time when I am explaining for the first time, I want to stress that don't touch the price of X and Y. Because see, that is the price on which we are doubting. Which price? X and Y. 4,000. We are doubting. So the price on which we are doubt, what we should tell them? You remain like this only. 4,000, cheater. You remain like this only. We will come with the right price. Although we felt 6,000 was right, but then there was a difference of discount. So we have to reduce it. And then we have to slap 4,000. Means don't touch 4,000. But you know, problem happens what? See, this is a drawing. In exam, it comes in the form of paragraph. You know what mess a student does? See here. This was X and Y. And this is X to outsider. What student does? They add discount. They feel, oh, this is discounted. What they do? They add. And that also they add in what? You know, in 6,000 they add. Firstly they add. And that also they add in. See, this is 4,000, this is 6,000. They add in 6,000. Because see, some students, they keep their brain aside, although they have brain. But because of their fear of exam, they become so mechanical and they make silly mistakes like this. So in short, right now, also you might be thinking why there is a need to exaggerate so much. See, this is just one point of discount. You know, in exam, they create so many varieties. Students are not able to think right. And only if you appreciate the point which I am stressing right now, you will never make the mistake. So tell me what I am stressing. Don't touch the price charged to associated enterprise on whom we are cheating. Sorry, on whom we are not trusting. The price of cheating should not be adjusted. Whatever adjustment you want to do, whether plus or minus, you have to do that in the uncontrolled price. And in my example, what is the uncontrolled price? 6,000. So see here, look at this, how the solution will look. Look at the right hand side of the screen. See, solution will be like this. Did you see what I have written? Your answer will start with uncontrolled price only, because the title of the method is uncontrolled price method. Start with uncontrolled price. And what is the uncontrolled price in my example? 6,000. Then look. After this, what I have done? I have deducted discount. Means let's assume in my example which I was saying that X Limited offered a quantity discount to Y Limited. Let's assume the amount of discount is $600. An amount like this will be given. So reduce 600. Reduce $600. So see, understand with hand, because the discount was a simple example. For other example, you will need help of my hand only. So this was 4,000, this is 6,000. So I have reduced 6,000 by the amount of discount. So now what happens, you know, this was discounted. Even this has become discounted. Discounted, both have come to par. Comparable. Now both have become comparable. And when they become comparable, now we can say that you are done cheating or not. So tell me, after this adjustment, what is the price? 5,400. So now what law will say? See, outsider's price also is also adjusted with the discount. And after that adjustment, look at my hand. The price is 5,400. But still you are showing $4,000 for your transaction with Y. Still you are showing less, cheating. But now the amount of cheating is only 1400. Did you see the advantage of the excuse which X Limited gave? And excuse me, you don't have to simply bluff. If law doesn't believe the discount factor, they will inquire in the scrutiny. That is the problem of the income tax department. Right now you don't doubt. As I said, we have to assume that discount reason is genuine. So due to that, now the blame of cheating is not of 2000. Now the blame of cheating is only to the extent of 1400, because the adjusted price is now 1400. Sorry, adjusted price now is 5400, and compared to 5400, if they have shown 4000, so now the blame is only of 1400 cheating. Okay, but see, this was just one example. Now I'll give you one more example. Try that. See here, this is sale from X to Y, and this is sale to outsiders. Okay, now imagine what X Limited is saying, that when we sell goods to Y, we don't give warranty. When we sell, see, this hand is X and Y. Okay, so when we sell goods to Y, we don't give warranty. But when we deal with outsiders, when we deal with unrelated parties, we offer warranty. You know, warranty, one year free warranty, etc. So now again I have created a point of difference. Because of warranty, these two transactions are not comparable. They are not at par, because sale to Y is, what did I say? Without warranty. By that what I am saying, sale to Y is without warranty, but sale to outsiders is with warranty. So tell me what difference it makes whether there is warranty or not. You know, whenever a businessman provides free warranty, it sounds like it's free, but nothing is free. They sell the goods at a higher price only. For example, this mobile, if I am getting 1 year, 2 years free warranty, or say 3 years warranty, it will cost me higher. But in case this mobile which I have purchased, they offer no warranty. So whenever the product does not have any warranty, so we are worried. So because of that, the price is also lower. Warranty product always have higher price except this thing. Why it is having higher price? Because you know what businessman done see. For example, I know this is my product, and since it is my product, I know very well that in this product so and so part will get damaged. So you know, I will foresee that in case this part gets damaged, and if I have to replace for free, what cost I will have to suffer. Means businessman thinks like this. In case this particular part of the product is damaged, and in case I have to repair it for free, so what will be the cost involved? So that I will estimate, and I will include in the sale price only. Means every product's selling price is decided. So while deciding the sale price, what I will do, I will assume that there will be some fault in the product. And assuming that there will be a fault in the product, I will include the cost of repairing the fault in the price only, and I will sell the product at higher price. And to my customer, I will portray, don't worry, any problem, free warranty, free 1 year warranty. So customer gets fooled with free warranty, but nothing is free in this world. What businessman has actually done? Whatever cost he will have to incur for replacement, etc. in that warranty period, he has included in the sale price only. In short, my objective is to make you feel the products which have warranty have higher sale price. Do you agree with this? Then only I can proceed ahead. All the products having warranty are little costlier. It has high price. So now tell me, what was this? Sale to Y Limited is without warranty, I said. Remember? Without warranty. And sale to outsiders is with warranty. So tell me, sale to outsiders is with warranty. With warranty means it is at higher level. I said right now products having warranty has a higher level of sale price. See, don't see the absolute figure. I am talking about nature. Nature of the price having warranty is usually higher. But this, why this hand I have kept low? Because between X and Y there was no warranty offered. And product without warranty are usually cheaper. So cheaper means cheaper. So now what to do? As I told you, don't touch this thing. What is the name of the method? Comparable uncontrolled price. So I have to touch this thing. So what should I do to bring both that par? Obviously I will have to reduce it. Reduce it by the amount of warranty. It was a warranty which has given rise to the price. So I will reduce the element of warranty so that this was already without warranty. This will also become without warranty. So both will come at par. So did you see I have to reduce warranty from $6,000. This was 6,000 outsiders. So $6,000 is already here. Now I need to reduce warranty from this. And how much warranty element you need to reduce, it will be given in the question. Look at the screen. I have already given one figure. See here. I am assuming the question states that there was warranty of, how question will write? $200 in the price of 6,000. So because of that 6,000 looks bigger. So we have to reduce that. See, this point is done. Now I just want to check whether you understood or not. Okay, try this. This is sale to Y and this is sale to outsiders. Okay, first I will keep my hand like this only. Okay, sale to Y is with warranty. Means when goods are sold to Y, between X and Y there is warranty, and outsiders we don't give any warranty. So tell me what happens to the nature of the price. I said this price has warranty and warranty prices are higher. But this has no warranty, so I'll keep it like this only. Now tell me what to do. What did I say? Should I touch this thing? See, transaction with AE should not be touched. Okay. So now adjustment should be done to the uncontrolled price. What is the name of the method? Comparable uncontrolled. So I should touch this. So what should I do to bring par? Obviously I will have to add the amount of warranty. As I said, outsiders price does not have warranty. So add it so that it becomes at par. See, with this hand movement, it becomes easy for you to understand. If I just state this has warranty, this has no warranty, it becomes difficult. See, what you should imagine in your mind, that actions I am doing with my hand. Because whenever you solve this sum, you have some imagination process going in your mind. So this is the process that should go in your mind. See, you know why did I change the example right now? That X and Y transaction has warranty and outsider transaction does not have warranty. So without warranty means the prices are lower. You know why did I change this example? Because some students simply biased that you should deduct only. But in this example what happened? Did I deduct or I have to add? I have to add because outsider's price does not have warranty and prices without warranty are usually lower. So what to do? We have to increase it. Means you have to add the warranty amount in outside price. All the adjustment you have to make in the outside price. Okay, one more example. See, I want to give maximum examples so that in case a question comes, you should be able to successfully solve. Actually, for a student, only one example was sufficient to convey the feeling of this method. Did you understand the feeling of this method? This method says what, you know, don't just blindly compare 6,000 and 4,000. Although 6,000 and 4,000 both are priced for the sale of laptop. But still you cannot blindly compare. There can be difference in the terms and condition of two sales, like discount, warranty, blah blah blah. So these differences we have to, we have to reconcile. These differences we have to reconcile in such a manner that both comes at par and both become comparable. So this was the feeling of the method. But for this now, even if I give 1,000 example, my explanation will remain same. Means with these two example, it is sufficient that you understood. But still, I want to give one more example that is really a good example. With that one more example, after that I will stop. Okay? See one more example. Basically, to give example, what I have to do? I have to create differences between transaction of X and Y and X and outsiders. So I am trying to create differences. One example I gave, here there was discount, here no discount, other was warranty. Now see one more. Sale to Y means between X and Y. So that 4,000 is assumed at CIF value. Okay, let me assume it is an FOB. FOB price. What did I say? FOB. What is that? I will tell you. But sale to, what was this hand? Outsider is at CIF value. Here you need to understand what is FOB and what is CIF. Because see, if you don't understand the meaning of FOB price, CIF price, you will not be able to think about the answer. Let me write and show what it is. What did I say? Are you listening to me carefully? Sale to Y Limited is at FOB, I said FOB. So let me write here FOB. This is what I said, right? And then what did I say? Sale to outsiders means that 6,000 amount is at CIF value. So I am writing here CIF. Now if a student doesn't understand what is the FOB CIF, you will not be able to answer in exam. But they write in the exams like this only. It was at FOB, it was at CIF, and they expect this much common sense from you. But although I will not assume, I will explain. Tell me, what is the full form of FOB? Free on board price. What is FOB? Free on board. Repeat, free on board. And what is CIF? Cost, insurance, freight. Cost, insurance and freight. You know what is this actually? These are the two types of sale price in export market. See, an exporter knows very well. If I am exporter, that means I have to sell my product outside India. And in export market, this is a very common term. Some exports are done at FOB price. Some exports are done at CIF price. Basically, FOB and CIF is a sale price. Now, what is the difference between the two sale price? Look at this. I have kept the entire explanation ready. See, with this example, once you understand what is FOB CIF, you will automatically be able to tell me that what to do with this case then. Means what adjustment needs to be done here. So see here, look at the screen. Just see what I am showing right now. See this first. Everyone knows the formula of sale price is cost plus profit, right? Now, as I said, FOB and CIF both are sale price only. And every sale price is made up of what? Cost plus profit. But you know, FOB sale price is like this. Cost plus profit, but Indian cost plus profit. Did you see I am stressing on Indian cost plus profit? Now what is that? I will explain. Let me first show what's written. Then CIF sale price is Indian cost plus insurance plus freight and then plus profit. Means the basic structure is same, cost plus profit. But what is the difference? In FOB it is Indian cost and profit. But in CIF Indian cost plus insurance plus freight. There comes the short form CIF. Can you see the initials which are highlighted? CIF means cost, insurance and freight. Now what difference it makes? Still I haven't explained. I just wrote a formula of the two sale price. Now see, with this drawing you will understand, okay? Now imagine I am a businessman in India. See, this is me. Can you see? I am standing here. This is Shirish Vyas, okay? I am doing business in India. Okay, and I have my customers in foreign country. See my foreign customer. Now, there are two methods of dealing with my customer. One is FOB, other is CIF. You know, under FOB, what will I tell my customer? See, I will tell my customer, dear customer, once I board the consignment on this ship, I am free from responsibility. Listen this sentence very carefully. What did I tell my customer? Dear customer in foreign, once I board. Board means what? To put the consignment on the ship. For example, I am exporting this product. This is my container. Usually there are big containers exported. So imagine this is the container which I want to export. So once I put the container on ship, it is called the consignment as boarded. Boarded means to climb on the ship. Don't we say I have boarded the flight? When do we say I have boarded the flight? Boarding. Because once you climb in the aircraft, once you sit in the aircraft, you call it is boarded. But that is in terms of airlines. Same goes with ship also. Once the product which I want to export, it is kept on the ship. We say the consignment has been boarded. And you know, in free on board what happens? I will become free once I board the consignment. Free from what? Free from further cost. You know what are the further costs possible in this example? Once, imagine this is a consignment which I am exporting. See, this is what I am exporting. And I have kept on ship means my consignment is boarded. And once I board, I will be free means what? I will not incur further expense. Can you imagine what expenses are possible now? The cost of ship only, which is called freight. And this whole journey will be through seaways. This is a risky journey. For that there is marine insurance. In case some mishap takes place in the journey through seaways, what if the ship sinks in the water? There are risks. That is called marine insurance. So for that we have to pay premium. But what did I tell my customer? All that is not my responsibility. As I said, I will be free. Feel the words. I will be free on board. Means once I board the consignment on the ship, I am free. That means I will not incur the cost of freight which I have to give to the ship, and the cost of insurance of the whole journey from India to say London or any foreign country. So I will not bear the cost of ship and the cost of this insurance. Why? Because I am free on board. And what customer said? I am okay with it. I am okay. I will bear those expense. You simply export the consignment. So tell me, if I am not ready to bear what? Freight of the ship and the insurance of the journey. So if I am not bearing, so it will not become my cost. So what will be my cost? Only the cost which I incur within the boundary of India. See, this line I am drawing, this is the boundary of India. Every expense which I incur within the boundary of India, that is only my cost. That's what I have written here as Indian cost. Did you see? Indian cost means all the cost incurred by the businessman till the boundary of the India. Or you can say precisely till the consignment boards the ship. Only those expenses are my responsibility. Because I told my customer that once I board, I am free. So tell me, will my cost include freight and insurance of the transit? Obviously not, because I have already told my customer that that is not my responsibility. So if I am not bearing those expenses, that will not become my cost. But now reverse case, imagine a reverse case. I am telling my customer, you don't have to incur even a single rupee. Every cost I will bear. I will transport the goods at your end, everything at my responsibility and my cost. So tell me, if I tell my customer that all the cost I will incur, that means what cost I have to incur? Look at the shading now. Huh? All the cost till the border of India, that I will have to incur. Plus I have told my customer that you don't have to bear any responsibility. Everything is mine. So what other cost will be involved? See, this I am shading, this is my Indian cost incurred within the boundary of India. Plus, I will have to suffer the insurance premium, marine insurance premium, and then the cost of freight. So tell me, if I am ready to bear every expenditure, my cost will increase. And if my cost will increase, obviously my sale price will increase. See, customer will love this when I say, you don't have to worry, I will incur everything, Customer will love this. But businessman is very smart. Once he gives full facility to the customers, he will recover everything from the customer. Tell me, if I also give you full facility, I will not teach you in a crowd of 200 students. I will teach you personally. So if I give you more facility, I will charge more. Then I am not going to charge 15,000 for DT. I will charge 5 lakhs for DT. Obviously, because I am teaching only one student privately. So in short, what I am trying to say, whenever you give more facility to the customer likes it. But businessman recovers automatically from the customer by charging high. So you know, this CIF pricing is usually higher, because in CIF pricing, what are we telling our customer? That you don't need to bear any expenditure, whether it is the cost of the ship, freight, or insurance of the transit. Everything I will bear. So customer becomes very happy. But businessman is smart. He incurs everything, but later on he recovers. Because if his cost will increase, obviously he will increase the sale price. So did you see the nature of CIF price? See the formula. Now you will understand the formula. In CIF pricing, our costing will be what? What will be our costing? Read what I have written. Indian cost means cost incurred within the boundaries of India. Did you see the boundary of India? And it will also include insurance. Tell me, this is which insurance which I am highlighting right now? Insurance of the sea journey, marine insurance. And freight means, look at this, freight means the cost of ship. Everything I am bearing. So my CIF sale price will be usually higher. You know what is the purpose of me giving all this explanation? Because see, I want the students to understand by listening to this statement only, CIF value, it is a higher sale price. And once you hear FOB, what was that? FOB, that means the sale price is on lower side. Why? Because free, FOB meaning is what? You are free on board. And once you board, you are free. That means you are not incurring any expense. So obviously, your sale price will be less. So now you can easily understand. After understanding this, try this one now. Try. Tell me how my hand was. This hand was X and Y, X and Y, and this is X and outsiders, okay? So tell me what to do. Tell me this, what is FOB, what is CIF? You have to tell me. This X and Y is what? FOB, and this is CIF. So tell me what is the nature of FOB FOB is a smaller price and CIF is higher price. Did you see how my hands are raising and going down? Why did this go down? Because the nature of FOB is lower, so it's going lower, and the nature of CIF is higher. So now there is a disparity. So how to bring the prices at par? What did I instruct? You should not touch the price with associated enterprise. What is the name of the method? Comparable, uncontrolled. So what is the uncontrolled price in my example? This thing. So this has to be adjusted. So what should I do? Obviously, since it has gone up, being CF, I have to reduce it. Reduce it by insurance and freight amount, which will be given in the question. So in 6,000, this is 6,000, right? I will reduce insurance and freight so that both will become comparable, both will match, both will come at par. So see, this is what I have done. Look at the screen. What I have done, in this 6,000, my left hand, I have reduced insurance and freight. Now don't think, how did I get 400? This will be given in the question. This has to be given in the question. They cannot simply say FOB CF without giving you the information about the insurance and the freight. Because the difference between FOB and CF is because of insurance and freight. You didn't realize this? See, the only difference between FOB and CF is what? Insurance and freight. So the amount of insurance and freight will be given in the question, which in my case it is 400. See, many students, you know what they think? Everything we are deducting only. So why sir is saying so much? We should deduct, that's it. Whatever is given, deduct. See, it's not always the case of less only. See, initially, first time, since I am explaining for the first time, I don't want to complicate. Sometimes minus, sometimes plus, you will get confused. So this is a simple example, but be prepared in exam. Sometimes you have to deduct, sometimes you have to add. Anything is possible. So you have to keep your mind broad. And what is the best way to remember, First understand the nature of two prices. And once you come to know the nature, accordingly you have to do plus or minus. But that plussing and minusing is done in that outsider's uncontrolled price. Okay, tell me if you understood. Think properly, yeah? This is sale from X to Y. This was at CIF. And outsider's transaction is at FOB. So first tell me what to do with my hand raising, and X and Y is, what did I say? CIF. So nature of CIF is, listening to CIF only you should feel, oh CIF. And sale to outsider is at FOB. FOB is lower. So now what to do? Don't touch the associated enterprise. What to do? This. So what to do? This price, whatever is given in the question, you will add insurance and freight so that it matches. This technique will be so simple for you to remember, because see, without this, it is very difficult to imagine whether to plus or minus. And one thing, if you fix in your mind that all the adjustments are to be done in the uncontrolled price, automatically your brain will work. Now see, pay attention here. After these adjustments, can you see the final price is 4,800? This is the arm's length price. Assuming there are no more, what I will say, there are no more differences between sale from X to Y and sale from X to outsiders. Only 3 differences were there, and these differences we have nicely reconciled. After reconciling the difference, the transaction have come at par. Now we can slap the assessee. How? We will say, cheater, you are showing only 4,000, whereas the genuine price is 4,800. But you are showing only 4,000. You are showing less how much less? 800. So the element of cheating is 800. You know why it is called cheating? Because showing less sales means showing less income. And showing less income is you're not paying tax. But how much is less? 800. So you know in the exam you have to write a conclusion. In the exam you have to write a conclusion. Can you guess how will the conclusion appear? Since the ALP is 4800 and the actual price is only 4000. So there is a difference of 800. This difference shall be added to the income of, who is the assessee? X Limited. See, we are not dealing with Y. In this whole chapter, we have to deal with X Limited. Y is a foreign entity. So what you should write? The difference of $800 shall be added to the income of X Limited. This way you have to write a conclusion also. Means I am explaining how to solve the sums on ALP. This is very popular. You see 10 past papers. At least 5 to 6 papers you will find a question on ALP. So anytime the question comes on ALP, after doing the computation, you have to write a conclusion. So tell me again, how will you write the conclusion in this sum? Since the ALP is 4800, the genuine sale price is 4800, but assessed has shown only 4000. Hence, the difference of $800 shall be added to the income of X Limited. This way you have to write in the exam. Now see one last thing, In case after doing this adjustments, this amount becomes say 3300. Originally it was 6000, but then after plus minus it became 3300. That means ALP is 3300. So now what to do? You are not understanding what I am trying to say. Means ALP is 3300. So tell me now, will government say like this? The genuine price should be 3300. But assessee, you are showing more income. Don't show more income. It is not good. Will government say like this? Are you feeling the amounts? You know what did I say? ALP is 3300. Whereas assessee had declared 4000, means he declaring more income. Will government say like this? You should not declare more income. You should reduce your profits now. Obviously government will not say like this. You know, in such scenario, what will be the mentality of the government, you know? That see, although the sale price should be 3300, but when you have shown 4000, so you should have thought something. So we respect your feelings. According to you, the sale price is 4000. You are right. You are absolutely right. This is a mere estimation. An estimation is just an estimation which can always be false. Forget this. Let this working go to hell. You are perfect, 4000. In short, you know what I am trying to say? After computing ALP, if you realize assessee has shown more income, most welcome. Most welcome. And then ALP working, scrap it. That ALP working, what you should say, go to hell. It was just a rough work, ignore it. And the price declared by the assessee shall be accepted. You know, this situation also they deliberately put in sums many times to test your knowledge. And sometimes a student gets shocked also. Oh, the price of 6000, after adjustment it has become 3300. And students who do not understand the concept, they write anything mechanically in the paper. Tell me, a person who has understood the concept, what should he write in the paper? After such answer of 3300, what will you write in the exam? Okay, since the assessor declared an income which is more than the arm's length price, the income declared by the assessor shall be accepted. And the price of 3,300 shall be ignored. This way your conclusion should come. But this is a rare case which I have created. Usually 99% sums, what you will find? After making various adjustments or discount warranty, you will arrive at a price compared to which the assessee has shown something less only. And assessee showing less, we cannot tolerate. The difference will be added to the income. So this is the way you compute arm's length price in comparable uncontrolled price method. Best is to appreciate and respect the word uncontrolled price and start your answer with uncontrolled price. The name of the method says uncontrolled price, start with uncontrolled price. But in the exam many times it is difficult to identify what is the uncontrolled, because they will not make a drawing like me. And see, in my example, what are the simple things? Firstly, a drawing with which you can visualize. Secondly, I am using the word outsiders. In exam, they don't write outsiders. You know what they will write? They will name some company, say M Limited. Still in my drawing, it is simple for you. But in exam, you will get confused at who is X, who is Y, who is M. And you know what they will do in exam? They will create a situation of sub-lug-gum-fo. Means they will say there is something like sub-lug-gum-fo between X and Y. So then your brain will work, oh, between X and Y there is sub-lug-gum-fo. So they are associated. And with M, they will not show any kind of relation. So this will make you imply, oh, that means M Limited is an outsider. I hope you understand what I am trying to say. In exam, it will be not that simple. A drawing will come. They will give a paragraph and they will never use the word outsiders. They will give the name of some company, some Z Limited, Q Limited, R Limited, something they will give. And it is for you to decide what? That who is associated and who is outsider. And there you will need knowledge of sub-lug-gum-fo. So tell me, imagine in the random question they will give P Limited, Q Limited, R Limited. Just 3 names are given, okay? And then they will say P Limited holds 40% of R Limited. 40% are between P and R, there is association. So then if you want, you can make your own drawing like this. But they will say like this, P held 40% in R, so that means they are associated. And with Q, they will not say anything, problem will be silent. So that means Q is an unrelated party. So in short, in exam, you have to operate your brain like this. Anyways, once you have understood the concept, it will be simple for you. So finally, our first method is done, which is called comparable uncontrolled price method. Take the uncontrolled price at the beginning and do plus minus in such a way that it becomes matchable and comparable with that cheating wala price. Price charged to A. We have to bring both the price at par. Okay, then this was the first method, comparable uncontrolled price method. Next method is RPM. What is RPM? Resale price method. Wait, before that, some students have a doubt here also. Wait, let me go back to the first method again. Some students usually ask me a doubt, sir, what if this price is not available? The price at which goods are sold to outsiders. So sometimes you are not able to follow this method. Which method? Comparable uncontrolled price method. Because the success of this method depends upon an uncontrolled price, which was 6,000 in my case. But many times a doubt comes, what if we don't know about this 6,000? So there are other methods for this. But before going to other method, there is one technique over here. In case you feel that 6,000 is not available. See what is the technique? Wait. If we do not know that X Limited is selling at what price to outsiders, so you know what is the other option? Look, what you can do, we can check the competitors of X Limited. Say for example, there is one competitor M Limited who is in the similar business of X Limited. We will check the price charged by M to its customers. See this. Means what we'll check? What price M Limited charges. Who is M Limited? A competitor of X Limited. Competitor means a person who is doing the same line of business as X Limited. So then we will check at what price M Limited sells to its customers. And the customers who are not related to X. So this price can become the benchmark. What word I used? This price can become the benchmark, and with this your answer will start. And then all adjustments. You know, this is called external cup. What was cup? CUP. External means external. M Limited is an outsider party. Sorry, it's an outside company. So it's an external company. So when you take external company's price as the base, it is called external cup. Cup means comparable uncontrolled price method. But you know what I did? I took X Limited's price only to outsider. So it was internal cup. So if a student has done articleship in transfer pricing department in some big four, he knows all these terms very well. Because in actual life, when you are doing the articleship, this is a common term used within the office of the CA. Which term? Internal cup, external cup. Internal cup, external cup. But this you will not find in the study material. But I feel like you should have knowledge about this also. In study material, they simply say, take uncontrolled price as the base. But what extra knowledge I gave? Sometimes the uncontrolled price can be external uncontrolled price, and sometimes it can be internal uncontrolled price. The example which I took here, that was of internal. Means internally within X Limited only we saw what price X Limited charges to its unrelated party. This was called internal cupum. Internal cupum. And if this is not available, what was the option? See, first priority should be internal. Obviously, since we are targeting X Limited, so first priority would be what? Take X Limited only as the base. At what price X Limited is selling means that internal cupum, that should be the first priority. But in case due to some reason this is not available, then we will see what? That similar to X Limited, there can be some other companies like M Limited. So at what price M is selling to its customer, that should be taken as a benchmark. Benchmark means the start point here. And then it is called external cupum. So just have knowledge of this also. So in case in the exam, they don't give you this thing, but they give you at what price M is selling to someone. So you should remember that sir had told this also. Then also this method can work. But now let us assume neither this internal comparable is available, nor external means like M Limited selling to its customer, even this is not available. Then sometimes this method can go flop. But there are other methods. Then we have to take help of some other method. Okay. But in this method, first priority should be internal cup and then external cup. So this was I wanted to say in comparable uncontrolled price method. Now finally we are out of this method. Now let's go to the other method. What is the other method? Resale price method. Now you know what is resale price method? Literally feel the word resale. You know what did I say today? Always feel the title of the method. With that title you should feel what it should be. Resale price method. You know this method is made for what? Look, especially for the branded products available in Indian market. Brands, foreign brands I'm talking about. Just give me one example of any foreign brand which is very popular in India. There are many foreign brands. Samsung is a foreign brand. Samsung is a company from Korea. Okay. So it's basically a foreign brand. Then L'Oreal shampoos. L'Oreal is a brand of France. Then Sony television. Sony music system. Sony is a brand of Japan. So all the foreign brands you imagine, for them, the next method is resale price method. I'll tell you how this method works. But before I start the method, I want you to keep your mind on the foreign brands available in India. Now, tell me, all the foreign brands like Samsung, Sony, L'Oreal, which I said, you know what is their tendency? Whenever they feel like doing business in India, firstly, they will not open a branch in India. You know the reason? If, for example, L'Oreal France or Samsung Korea has a branch in India, and via branch if they sell the goods in India, they will have to pay 40% tax in India. You know why? All the foreign companies generating income in India have to pay 40% tax. 30% tax in India works when it's an Indian company. So tell me, if Samsung Korea Samsung means a foreign company, if it does not start a separate company in India, in the brand of Samsung Korea only, if it sells the products in India, by opening various branches, listen carefully, branches I am saying, not a separate entity. They have kept just one entity, Samsung Korea, which is a foreign company because incorporated in Korea. So imagine if that Korean foreign company, they do not have a separate entity in India. They simply sell goods in Indian market and they make huge profits. So you know what Indian government will say? You make huge profits, Korean company. So being a Korean company, they have to pay 40% tax. So that's why, you know, these foreign brands are very smart. What they do, they don't sell the goods in India through branch, because branch cannot have a separate legal entity. What they do, firstly they will open a new company in India which is registered in India as an Indian company. Because see, if you get the tag of an Indian company, the tax rate is 30% only. In fact, sometimes instead of 30%, Indian companies have to pay nowadays 25% also, sometimes 22% also, sometimes 15% also. You heard what I said? Indian companies sometimes instead of 30, they have to pay 25, 22, 15. See, when these lower rates are there, I will explain at a later stage. But you know why did I speak right now? Because some students in the articleship, they are aware of these things. That yes, Indian corporates, it's not necessary they have to pay 30%, sometimes even less. But whatever less, right? But for a foreign company, the rate is 40%. See, slowly I will come to the method. First, I need to make you understand the tendencies of foreign companies doing business in India. So what was the first tendency? Whenever a foreign company wants to sell goods in India, they will have a separate entity formed in India. And since it will be formed in India, it will get the character of an Indian company. An Indian company will have low rate of tax. And if they don't do that planning, if they just run the business in the name of that foreign entity only, so they will be liable to pay tax at 40%. So that's why they never do that. They always have a separate entity. And then, imagine now what other planning they can do. Once Samsung Korea has a separate company in India, say Samsung India, then by forming two entities, they can also do base erosion profit shifting. Tell me how. Please think how Samsung Korea, by forming a separate company in India, how they can do the cheating of base erosion profit shifting. And see, always think from Indian entities point of view. Don't try to make yourself Korean Samsung. Korean Samsung is a company in foreign. Think from Samsung India Limited. Because see, Indian government is concerned with what? Samsung India Limited. Because that company is selling business, doing business in India. So think from Samsung India. See why I am saying this, because some students keep thinking from that foreign entities point of view. See, I have to take example of Samsung Korea, but think from Indian entities point of view. So can you imagine how Indian Samsung can hurt Indian government sentiment through BEPS? No, it's see. Firstly, do you know what should be the understanding between Samsung Korea and Samsung India? See, Indian Samsung is not the main company. Main company is Korean. You know what Indian Samsung has to do? It has to simply import goods from Korea. Why did I say import? It will buy. Samsung India is not manufacturing. Main products of Samsung are manufactured by the foreign entity. What Indian Samsung has to simply do, you know, buy from Korea, mobiles, electronics, air conditions, Samsung, many products are there. They will buy from Korea, its parent entity, and then sell in Indian market without further processing. So here what cheating they will do? Whenever they buy from the parent entity, that is Samsung Korea, they will show the purchases at higher price. Think from Samsung India, what Samsung India can do. So Samsung India, when it buys, what? It buys goods from Samsung Korea, it will buy at higher price so that it can record more purchase. And higher the purchase, higher the expense. When you show more expense, your profit will go down. And your profit will go down means you can save tax in India. But you know, on the other hand, the profit of Korean Samsung will increase. Why? Because obviously if Indian Samsung is showing higher purchase for me is sale for Korea. And if Korea has to show higher sale, their profits will rise. So Indian profits are going down and the profits of Korea is rising. So profit is shifting to Korea. So there is BEPS. So did you understand the cheating? For such cheating, there is resale price method. You know why resale? Because Indian Samsung is doing nothing but resale. You didn't realize only. What is the job of Indian Samsung in India? Simply buy the products from Korea and sell in Indian market. You are a reseller. Feel the word reseller, retailer. You are completely into retail. Does Samsung India do manufacturing? No. What Samsung India has to do is pure retail. Retail means, understood or not? Buy the goods and sell as it is in the same condition without any further processing. See, manufacturers, what they do? They buy and they process and then they sell. That is manufacturers. But here Samsung India, have you ever heard that Samsung India, when it imports the mobiles from Korea, they will do changes and sell in India? You get the mobile in the same condition, Samsung mobile, as it is available in Korean market. Same mobile you find in India, because Indian Samsung cannot do any processing. It has to simply buy Samsung mobiles from Korea and sell as it is. And when you buy and sell as it is, it's called resale. Slowly the name of the method is coming in limelight. See how this method is working, I haven't explained. But first I want to explain this method is meant for Samsung kind of entities where a brand is of foreign, but they have one chart as a company in India. And chart a company in India means a separate small company in India and that company's job is to simply import from the parent entity and sell in Indian market. So this activity which Samsung India is doing is pure resale. So that's why the method resale price method. Okay, now just for my satisfaction, tell me, give me one more example like Samsung, what L'Oreal might be doing. I am simply repeating because I want this concept should be thorough. Just as Samsung is a foreign brand, let's take another foreign brand, L'Oreal shampoos. L'Oreal shampoos, it is originally a brand of France. So tell me, if L'Oreal France, they want to capture Indian market, first what they will do? Will they directly sell products in Indian market via branches? No. What they will do? First they will create a separate company. What is the logic of that? Explain me. Because if they don't do that, they will be said as if a foreign company is earning profits in India, and foreign company earning profits in India, they will be liable to pay tax at 40%. So that's why what they will do? They will open a separate company, L'Oreal India Limited, and by opening a separate entity, it will be called as an Indian company. An Indian company will be liable to pay tax not at 40 but only at 30%, sometimes even less also. And then what other planning they will do? But wait, this planning of opening a separate company so that you are not levied 40%, this is not cheating, this is tax planning. This can be done officially. For this, Indian government cannot say you are cheating. What cheating? This is, we are taking the advantage of the provisions. And when you officially take the advantage of the provision without any, malafide crooked intention, it is a tax planning. So when L'Oreal France has a separate entity in India, we cannot blame. You are doing cheating, you cannot have a separate. Why? See, there should be freedom in doing the business. In a business, can you tell anyone you cannot form your own separate entity? You can. So when L'Oreal France has a separate entity in India named as an Indian company, it can do very well. So that instead of 40, they have to pay only 30% tax. So that will always work. But the other thing they will do now, what is the other cheating they will do now? Now there are two companies, L'Oreal France, L'Oreal India. What will be the job of L'Oreal India? Import shampoos from France and sell as it is in Indian market. They will be doing retail. Indian L'Oreal will not do manufacturing of shampoos. They will simply buy from France and sell. So they will do resale. So now what cheating will be done? Are you thinking from France or India L'Oreal? India L'Oreal. Think from India L'Oreal. What Indian L'Oreal will do? What Indian L'Oreal will do when they buy shampoos from France? See, France is the parent company only. But when two separate entities are there, we have to say we are buying shampoos. We have to say as if L'Oreal India is purchasing shampoos. So what cheating is possible? When Indian L'Oreal imports from France, they will purchase at higher price. Means they will show as if they have purchased at a huge price. So that if they show more purchases, expense will be more, so profit will go down. So we can save tax in India, but this is cheating. And this way you are reducing the profit and shifting to France. How profit is shifted to France? Because if you show higher purchases is a high purchase for me, but for France the same thing is sale. So they have to report more sales, and reporting more sales means they have to report more income. Their tax will increase, but maybe they are not bothered. Maybe in their country the tax rate is less. So in short, there is base erosion, profit shifting. So to control such cheating, we have resale price method. Now next, what I have to explain? How this method actually works. I'll do one thing. I will directly ask you to try. Because somehow this method works with common sense, which you have, I presume. So since it works with common sense, do one thing, I will give you the data. You try what should be the arm's length price over here. Means your target is to find the genuine price. Okay, so understand the data properly. I have taken the same example of Samsung. Can you see Korea? Let's go to Korea. See this Korea. In Korea, there is a popular brand called Samsung. See what I have written. S as in bracket F means Samsung Foreign Limited. I am just giving a dummy name of my own. Samsung Foreign Limited. And this is Samsung India Limited. And did you notice LTD twice? LTD is a sign of separate entity. So two separate entities are there, okay? And then why I have written AE? Associated. Obviously Samsung Korea might definitely have some big stake in Samsung India. At least 26% should be there, or anything from Sablak Gumfo should be there. So they are associated, that's for sure. Now tell me, what Samsung India has to do? It has to purchase from Korea and sell in Indian market, okay? And you know, this thing which I have drawn in black, this is not trustworthy. See the black portion. This portion is not trustworthy. Why? Whenever two associated enterprise transact, and if there is an international transaction, AE plus IT. See, you also develop a habit like this. Whenever you see AE plus IT, definitely something is wrong. So you felt like this because AE and India to foreign international transaction. So there is a combination of AE plus IT. So we cannot trust the price of 5,200. Can you tell me what Indian Samsung should have done? What Indian Samsung should have done? They should have shown purchase at higher, means they should have shown more purchase price, so that in India Samsung India Limited can show less profits and pay less tax. So tell me now what to do, how to find out the authentic and the genuine purchase price. See, I'll do one thing, I'll put a question mark on this. Question mark means, see here, we don't trust. Question mark means we have a doubt that this is definitely not the genuine price. Now, can you find the genuine price? Genuine price means what? What should be the genuine price between Samsung India and Samsung Foreign? Means at what price Indian Samsung should have purchased? Find out the true price and see the data with you. The data with you is what you know. Look, Samsung India sells the same product in Indian market at 6,000. You know, this thing is actually resale. Why it is called resale? Why it is called resale? This was the first sale. This is the resale. So the main sale is between Samsung Korea and Samsung India. So this is the first sale. From Korea it is sale only, na? From Korea's point of view it's a sale. And then it is a resale. So Samsung India will resell the product in India market for $6,000. Obviously in India sale is not done in dollars. But just take the currency as casually. I have written $6,000. You might have a doubt that, sir, why sale in India in dollars? I know in India the goods are sold in rupees. But right now don't fall in the trap of the currency. Ignore the currency factor. See the amounts. Now see, I will give you some data with which you can try what should be the genuine price. Look at the screen. Can you see below? I have written this thing. This will be provided in the sum. What is this purchase rated expense? You are thinking from whose point of view? Korea or India? India. So when India has to purchase, 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 purchase from foreign Samsung, there might be some incidental expense. You understand incidental expense? Incidental means connected. What can be connected with purchase? Especially when you purchase from foreign, you have to pay custom duty. You have to pay transport charges for getting the goods from foreign country to India. So there are transportation, custom duty, blah blah blah. These are called purchase related expense. So assume in my example that Samsung India had to incur purchase related expense of $300. See, I am creating a question kind of thing and then you try. And I believe you can try with common sense. So what is 300? Purchase rate. See, purchase rated means it is not included in 5,200. 5,200 is a pure price of the product. It is a product price. And additionally, $300 is the transportation, etc. Some incidental expense. Okay, now what I have written this thing? What is this? Normal GP margin 20% of sales. You know, please understand this, otherwise it will be difficult for you to digest this method. What is this normal GP margin? Means, look, the product which Samsung is doing retail, the product which Samsung is into, in that same product what other dealers have the margin. Means, for example, look at this. This Samsung India is importing mobiles from Korea. But it is possible or not that other than Samsung India, there can be some outsiders who also import what? Samsung mobile from Korea and they sell in Indian market. Means what I am trying to say, it is possible or not that there can be similar players. What do you mean by similar players? Players similar to Samsung. The activity which Samsung India is doing, what activity? Import from Korea, sell in India. There might be some other dealers doing the same activity. For example, imagine this outsider is Shirish Vyas. I am Shirish Vyas. Even I am importing Samsung mobiles from Korea. I am allowed. I am a big businessman, but I am not related to the family of Samsung. I am Shirish Vyas. I have got no connection or association with Samsung brand. That's why I am an outsider. So imagine if I import from Korea what? Samsung mobiles and sell in Indian market, my percentage is 20% margin. Means I am working on 20% margin. And you know, in retail industry, everyone will have same profit margin. Why? Tell me. In retail, what retailer has to do? Have you understood? He has to buy the product and sell in the same condition. So tell me, if this retail activity, whether I do or you do or anyone else does, everyone will have same margin, because the product Samsung mobile will have same costing and same pricing. So tell me, whether I open a store of Samsung mobile or you open, we both will have same margin or not, except this, otherwise it will not be possible to move on. See, imagine I have a big mobile shop of Samsung mobile and I stock all Samsung mobiles and then sell. If this activity, if you also do, you will have same margin on per mobile. Means on each mobile, if I get 20% margin, so if I get that, even you will get that. Yes, it is possible that I might have a big showroom of Samsung mobile. You might have a small shop. Our total turnover might differ because I have a big showroom of Samsung mobiles. You are having a small shop. So volume is different. But per unit margin, do you agree it will be same? Because neither Samsung is my brand nor your brand. We are simply retailers. So what retailers do, they simply buy the branded product and sell in the open market. They will have a standard margin. And this margin will be given in the question. And let's assume it is 20% on sales. So explain me what is 20% in my example. Then everything will be very simple. What is 20% in my example? That if outsiders who are not associated to the family of Samsung, if they buy mobile from Korea and if they sell the mobile in India, their profit margin is 20%. This will be given in the question. And you know, this 20% profit margin is trustworthy. Why can you trust on this? Why you can trust on 20%? Because this is the margin with outsiders. And outsiders are unrelated parties. So whenever we see unrelated parties, we believe the transaction. See, we don't believe Samsung India. Why? Because he is associated to Korean Samsung. But we can believe outsiders. So outsiders GP margin will be given in the question. Now do one thing, with the help of this data, please try to find out what you will find. The genuine purchase price which should have been between Samsung India and Samsung Foreign. Because see, one thing is for sure, we don't trust 5,200. We don't trust it. So when we don't trust it, we need to find the true price. Try to find on your own. Try on your own. I give you some time. Students watching the video, please pause the video. Students watching the video, please pause the video for a moment, because if you try on your own, you will find the explanation is very simple. And most of the students should be able to find on their own only. So try on your own. I'll just wait. Even I will pause the recording. You try. So did you try the answer? Now see, whatever you might have tried, let me explain you my method. My method will be so simple that even if I just show it on the screen, you will understand. Look at the screen. Answer is ready. What is the correct answer? 4,500 is the correct answer. You know what is the technique which I have adopted? I have prepared a trading account. It becomes so simple to find out and convince the students also. Because if I try to explain with some other method, you will have to literally juggle your brain. Best is a trading account. It is simple to explain also. See, let me explain. First, did you understand my objective was what? Since I don't trust the purchase price which Indian Samsung is showing, I want to find the true purchase price. So your objective is clear, that we want to find purchase. So that purchase I can find it as a balancing figure in a trading account. Purchase I can find as a balancing figure. Now you will wonder, why balancing figure? We know this. See, this we know, but this is not trustworthy. I want to know the genuine price. Genuine price we don't know, na? This we know, but this is false. So to find genuine purchase price, I am relying upon the balancing figure of trading account. So if I want this as the balancing figure, let me put all of the data in the trading account, which can be clearly seen from the example. I'll show you one by one. Credit side, did you see I have written sales of 6,000? From where did I get this? Look here. Because see, this figure is reliable. Tell me why it is reliable. Because see, this is sale to general public. Public to whom, whether Indian Samsung sells or outsiders sell, public is sold at the same price. Tell me, as public, whether you buy the mobile from Samsung India or you buy mobile from outside, the price will be same. So this price we can completely rely. So you know, when prices cannot be trusted, when it is with AE, here is there any AE involved? This sale is done to the general public, and general public is not a related party. So this is a trustworthy price, and this will be given in the question. Huh? Believe first, this will be given in the question. They will tell you the product which is imported from foreign market, it is resold in Indian market at so and so price, like 6,000 in my example. This will be given. So this I have written on trading on credit side, and also they have given GP percentage, and this GP percentage 20%, even this is reliable. Why this is trustworthy? Because this is the margin which outsiders earn when they import from Korea and sell in Indian market. So outsiders are unrelated party. So even this is trustworthy. You know, basically what I am trying to show, look. Each and every figure over here is trustworthy. So when you are playing with trustworthy figure, obviously the balancing figure will also be trustworthy. And we want to find a trustworthy, reliable, genuine price which is arm's length price. So this you understood. This 1200, how did I get? 20% on sales. It was on sales, right? So that comes to 1200, 20% of 6,000. Then, did you see purchase related expenses? See, purchase related expense, why it is recorded as a separate item? Because it is different from purchase related, means it's not the purchase cost. For purchasing the goods, you have to incur some incidental expense. So that incidental expense I have recorded separately as 300. Even in this 5,200, that purchase rated was not included. 5,200 was the pure product price. So this is shown separately. And even purchase rated expense is trustworthy or not? Because purchase rated means all custom duty, transportation, which is incurred with some unrelated parties. So with the help of this trading account, we can find out the purchase as a balancing figure. This is the arm's length price as per resale price method. And this actually a student who tries on your own can work out with common sense only. And this makes you realize, okay, this is a common sense here. You can easily find arm's length price in resale price method. Only thing is you need all this data. And this data will be given in the question. See, you might wonder, how do we come to know this 20% on sales? Yes, in real life, these things are challenging. What is challenging in real life? What? That GP margin, 20%. But for that, we have to do research. And such research is done by big fours. KPMG, Deloitte, PwC, EY. They have their own team of transfer pricing. So they have to do this research that, for example, if the product is mobile or shampoo or say garments, so in that particular product, what is the margin in retail industry, that we have to find out. But that headache you don't have to take in exam. That headache is there in the real life. In exam, trust me, this 20% will be given in the question. You simply have to use that data and find out the price. So this was the arm's length price. Now tell me, if a student asks me, sir, you have nicely drawn the trading account, where is the opening stock and closing stock? What are you thinking about stocks? This is not a trading account for the entire year. This is a trading account of one transaction. So don't think about stocks. Also, for a retailer, these are the only items on trading account. See, if I would have been a manufacturer, then there are factory expense, wages, etc. This is a trading account from a retailer's point of view. What a retailer has to do? Buy and sell, buy and sell. And at the most, when you buy, you have to incur some purchase related expense. Means I am making you feel that these are the only items in the trading account of a retailer, and we are basically targeting a retailer only, which is Samsung India in my example. Okay, now tell me, what will be the conclusion after knowing the reality of 4,500? See, you don't have to just find out the ALP in exam, you have to give the conclusion. So what do you conclude after knowing 4,500? Feel and you'll understand. 4,500 is the genuine purchase price, whereas Samsung India Limited has shown 5,200, shown more expense. Showing 5,200 as higher amount means you are showing more expense, purchase expense, and when you show more expense, you are doing cheating, because by inflating the expense, you are reducing the profit. So this is a cheating. So what should be the conclusion? Whatever excess price Samsung India has shown compared to 4,500 means how much? $700 shall be added back to the profit. See, we don't have to reduce. See, the difference of 700, that has reduced the profits of Samsung India. So what will we tell Samsung India? You have reduced your profit, add back your profit. Why I am saying they have reduced the profit? By recording more purchase, you are inflating the expenditure and reducing the profit. So we have to add back the profit. See, finally adjustment is to be made in the profit. So Samsung India Limited, don't you think it might have reported low profit? So whatever lower profit they have reported, we have to add back. You know why did I use the word add back? See, when you deduct excessively something and find out the profit, so we have to go reverse and add back. What Samsung India should have done? They have excessively shown purchases of 5,200. So excessively showing expense means you are reducing the profit. So we add back. Add back by difference. What is the difference between 4,500 and this? $700. So your conclusion should appear like this, that the difference of $700 shall be added back to the net profit of Samsung India Limited. This is the final conclusion, and this is called resale price method. And you know, mainly this method is targeting which types of assessees? All the Indian retailers whose parent entity is in foreign country, like L'Oreal, Sony, Samsung, LG. These are all Indian retailers who have their parent entity in a foreign country. And these Indian entities made by foreign brands, they are cheaters. They buy from foreign and they record huge purchase. So to attack that cheating, there is resale price method. See, if I wouldn't have explained with the brands like Samsung, L'Oreal, you know, it becomes impossible to understand. If I just explain A limited, B limited, Z limited, you don't understand the concept only. But if I actually take the name of the brands like L'Oreal, Samsung, you can easily digest. So this SS was nothing but Samsung only in my example. Okay, wait. What was, one point is remaining. What was this 4,500? We say like this, that at 4,500, outsiders purchase and sell in Indian market. Obviously this is outsiders, because we took the GP margin of outsiders. So the price which we have developed 4,500 is of outsiders. Except this, then I'll move on. And what we are telling Samsung India, when outsiders can buy the same mobile from Korea for complete my sentence. What we are telling Samsung India, that when outsiders can buy the same mobile for 4,500, how come you show 5,200? You're cheating. But now they can have some excuse. Now they can have some excuse. You know what excuse? Listen carefully. Listen. What Samsung India is saying, that our transaction and outsiders transaction are not at same terms and condition. So now we have to reconcile those terms also. Discount, warranty, FOB, remember? Similar thing you have to do here also. Because Samsung India can always have an excuse. What kind of excuse? That our terms between Samsung Korea and Samsung India, we have a different terms. And outsiders buy from Korea at different terms. So they will start talking about the difference in the terms. So we need to reconcile that. So try on your own. Try, I am giving one example, okay? Say for example, we came to know that Samsung India got discount of $200. Samsung India got discount of $200, which outsiders didn't get. I am writing here. Samsung got discount of how much? $200, whereas outsiders are not getting any discount. Means imagine this, we came to know in detailed scrutiny that Samsung India had got discount. In spite of discount, their price looks higher. Feel how funny it is. Although Samsung India got discount, so discounted price should be less. In spite of they getting discount, still they are showing 5,200 as a purchase price. And this privilege of discount was not availed by outsiders. So how to reconcile? See, with my hand technique. This is Samsung transaction. Now it is a purchase price. This is Samsung transaction. Samsung India, Samsung Korea. So here what did I say? Repeat the same thing which I said. Here there was discount and outsiders buy from Korea without discount. So tell me, what happens to the price when there is discount or no discount? Here discount was there. Discounted prices are lower. The nature of discount is such that it lowers the price, right? And outsiders didn't get the discount. So undiscounted price is usually costly. Discounted price is cheaper. So now tell me how to balance it. What did I say? Never touch the associated enterprise transaction price. Don't touch it. We will touch this. So what to do? We will reduce this by $200. If you heard properly, I said 200 was a discount. So this is 4,500 we already found. So we'll reduce it by the discount so that it becomes at par. Understood? So reducing that by 200. So what will be the price then? Revised price. We had already found 4,500. Now from 4,500, if you reduce 200, so it becomes what? 4,300. See, both are comparable. This is also discounted. That was already discounted. Discounted, same. Now your conclusion will differ. Now it is a bigger cheating. Means now we can say, had this discount been given to outsider could have bought it for only 4,300. But you cheater Indian Samsung, you are showing 5,200. You are showing purchases more by $900. So you reduce the profits by 900, add back 900. In short, this was nothing new. This I had explained in the previous method also. That adjustment or discount warranty can come here also. See, for my satisfaction, Wait. After that, I wanted to ask one question, but wait. Before that, let me show this thing. This whole thing I have written again with a different method. Means in the form of a statement. See the answer which we arrived at 4,300. In the law, they have not said that prepare a trading account and get the answer. Will law say like this? Law's language is so horrible, they will never say prepare a trading account, just take as a balancing figure. See, this was an informal technique given by me for my students' convenience. But actually, law has given a format like this. This format I didn't create, it is given in the act. Tell me how the format is going. Format starts with resale price. So what was the resale price? Resale means after import is done in Indian market, at what price it is further sold. Resale. So that's 6,000. And then from that 20% GP margin. So you got the total cost, total. And from the total cost, if you remove incidental expenses, you will get the purchase cost, which was balancing figure here. And then I reduced discount. I had explained the discount adjustment. And then what you get is arm's length price. This is resale price method. Okay, tell me, in this same example, if I give you like this, wait, say for example, this was at CIF and this was FOB. Means the price at which, complete my sentence, price at which outsiders import from Korea, it is FOB price, and the price at which Samsung India imports is at CIF. So again this creates a difference in the terms. See, whenever there are difference in the terms and condition, we have to reconcile that. So use my hand technique. Did you see this? Now I will show the same thing with my hand. This is Samsung India and Samsung Korea. I said it is a CIF. Okay. And outsiders transaction is at FOB. So what is the nature of FOB? FOB is lower in value. CIF is higher in value. So can you see the mismatch? This is at CIF and this is at FOB. So what to do? What did I explain? Don't touch associated enterprise price. You have to touch the outsider's price. So what should I do? Obviously this hand has to go up. This is at FOB. So I will have to add insurance and freight to bring it at par. So add insurance and freight. Because outsider's price is at FOB. And all the adjustment you have to do in outside price. See, always you don't have to use this hand. You can use with your brain also. You have to simply focus on what you know, outside price. If you feel outside price is FOB, increase it. FOB is lower, right? So increase it. And vice versa, outside prices. If outside price would have been CIF, so your mind should work like outside price CIF means it is high. So reduce it. Adjustment has to be done in the outsider's price. Never try to adjust this prices of between associated. Because prices between associated, we are targeting that as a cheater. So we have to find the genuine price with outsiders transaction price. In short, that point of discount, FOB, CIF can be put in this question also. But usually, you know what they do? They don't put these adjustment points in this method. But law says, in case there are some adjustment like discount, warranty, FOB, CIF, you have to adjust it. And then you have to arrive at the arm's length price. Done. This is second method. Wait, you know, this adjustments of discount, in exam you cannot just write adjustment. There is a particular sentence which you have to use for this. Please pay attention. Right now I am talking about some wordings thing. Wordings. When you minus this discount, will you just write adjustments? There is a particular sentence. Listen to this sentence and I want you to by heart that sentence. Look at me. Adjustments to account for differences between international transaction and uncontrolled transaction. What did I say? Adjustments to account for. See, to account for means to add or less is means you are accounting for. See, in English what we say? That we are accounting for the discount adjustment. So to add and less is what you are accounting. So you know what is the language of the law? Adjustments to account for. Repeat what it should be. Adjustments to account for differences between international transaction and uncontrolled transaction. You know, this hand I am usually using for what? Transaction with AE. The transaction with AE is popularly called international transaction by the law. Whereas outsiders also, they are also importing from foreign. In layman's language, even this is international level transaction. But for this chapter, the word international transaction is for transaction with AE. And transaction with outsider should always be called as uncontrolled transaction. See, be familiar with this terminology, otherwise you will not be able to enter deep into the subject. So, whenever I am addressing this transaction between AE, you should say it is an international transaction. Means that cheating wala transaction, cheating oriented transaction between AE is always called international. Obviously, in layman's language, you would say this is also international only. See, here international, not that general international. For this chapter, international means this transaction. So tell me, what should you call this transaction as? Uncontrolled transaction. You know why I am talking all this? See, I was talking about how should you write this in exam. So what will you write? Will you just write adjustments? No, you should write like this. Adjustments to account for differences between international transaction and uncontrolled transaction. See, with my hand, I am repeatedly saying this is international associate enterprise and this is uncontrolled transaction. And the sentence makes sense. Adjustments to account for differences between international transaction, that is with AE, and uncontrolled transaction, that is with outsiders. So differences between the two transactions are accounted for. You know why I am putting so much efforts? Because in exam when the sum comes, if you just write adjustment, it won't sound good. And forget exam question. When you also read study material and my notes, everywhere you will find this sentence. Don't you think you will not understand and you will be bothered that time? So what this sentence speaks? Repeat. Adjustments to account for. Language is adjustments to account for differences between international transaction, means the transaction be and uncontrolled transaction. I use short form. Adjustments to account for difference between IT and UT. IT and UT. Whenever I say IT, and by the way, it's a popular short form. Even in day-to-day life, you talk to some colleague of yours, say some chartered accountant, anyone aware of transfer pricing provisions, if you say IT, UT, it's very popular. What is IT? International transaction. And what is UT? Uncontrolled transaction. So this I wanted to explain. Even you know, this was second method, right? Even in the first method, Can you tell me the format prescribed by the law? See, first method I explained. Did you notice one difference in the first and the second method? In first method, we were finding the sale price which should be the genuine. But in second method, it was cheating was in purchase transaction. And second method, look. See, this is actually a universal method. Universal means general. First one. Second method, is it a general universal method? Okay, it suits in specific situation. Specific situation, you didn't realize that? Second method suits in a specific situation. Especially when an Indian entity has a foreign parent entity who is the main brand. An Indian entity has to simply import and sell in Indian market. So it suits that scenario only. In short, what I am trying to convey is resale price method is specifically suiting such scenario whenever Indian company has some parent entity in foreign from where they import and sell in Indian market. It is typically for that only. Typically for retailers. But this is a general method. And by the way, here we were arriving at the sale price. And in the second method, we were arriving at the purchase price. Anyways, right now you don't think, sir, how will we come to know which method to use when? Let us finish all the methods. Let us finish all the methods. Then you use your brains. And if you have got so much anxiety, let me make it clear. In the exam, the sum will be so clear that identifying the method will not be a challenge. Yes, in real life, it becomes a challenge sometimes to decide which method to use because there are 5 methods. But in exam, that will not be a challenge. Anyways, right now I was showing this why, I wanted to explain the format of this method prescribed in the law. Can you convert this into a format kind of thing? Has law said like this, take uncontrolled price minus discount minus warranty? Will law give a format like this saying minus only? Obviously in the law there should be some language in which this format is given. I want you to know that language. See what is that? Look. Price charged in comparable uncontrolled transaction. What law is written? Price. This 6,000 only. What this 6,000 is called? Price charged in comparable uncontrolled transaction. This was uncontrolled only. Then add or less adjustments to account for differences between IT and UT. Repeat. Price charged in comparable uncontrolled transactions. Add or less adjustments. I am struggling to make you by heart this sentence only. Try. Adjustments to account for differences between IT. My right hand was IT. AE, transaction with AE. Differences between IT and UT. IT is international transaction. UT is uncontrolled transaction. So now remember by default, whenever I show this hand, it is AE. Transaction AE means IT. And this outsiders is uncontrolled. Okay. So basically I wanted to make you learn the language of the law. See, if you see this thing in your notes, just take out the notes, how it is written in the law. See, in our printed notes, you will find same example is there. Did you notice till right now I was struggling to make you remember this? See what I am underlining. See what I am underlining. This sentence I was struggling because I want you to literally by heart this. Read once again for my satisfaction what's written. adjustments to account for differences between IT and UT. And you can also do one thing in your notes, circle the word differences and you can write there as an example discount, warranty, etc. Discount, warranty, etc. But that adjustment is done in the uncontrolled price, which is 6,000. 6,000 also, if you want, you can write. In our example, it was 6,000. In our notes also, it is 6,000 only. And then see the resale price method. Even there the language is like this. Wait. Did you see adjustments for, wait, the original format is here. Here. Can you see here? Adjustments to account for differences between IT and UT. So finally this was the resale price method. Two methods we have done. First method was Kapam. Second was Rapam. Other methods I will not be able to touch now. I will have to leave the lecture now. So to be continued with the other methods in the next lecture. Okay. Till then revise and come. Please revise and come. Wait. There are two questions for homework in transfer pricing. Means both the methods which are explained. You can have a good practice by way of two sums. One sum is there on Kapam. One sum is there on Rapam. And if you see in transfer pricing questions, wait, let me show you the question. In the questions file, transfer pricing, what page it is? Yeah, see this. Question number 1 and 2 both are for homework. And if you are able to solve this sum, you will get confidence. I am sure in second question you may be stuck up. But the point is not new. Everything I have explained. But sometimes a student is not able to interpret the question properly. So at the most a student may be stuck up in question 2. But otherwise you will be able to solve on your own. At least by looking at the solution which I will provide, you will automatically understand. But these two sums you need to do at this moment only. Then only I can successfully move to the next method. Okay. So please do the homework and come. Question number 1 and 2 of transfer.